All it says is, I have a great brand new topic. It's the best one ever. Just remind me. We need to put it out there. And then he sent a text 15 minutes later. It's about algorithms. Great. Don't let me forget.
You didn't. I let you down with my notes. That's really vague.
Yeah.
It was great, though. I can remember thinking this is a great one.
Hey, welcome to Hedge Heads, where we discuss the commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. Well, no one knows where the market's going. We're not afraid to share some ideas. I'm Ryan Tunkseth. He's John Prishman. Well, John, it's election day, but that is all I'm going to say about it, because by the time this is released, it'll be over. We'll know a whole bunch of stuff. And really, as far as hedging goes, let's find out who won and then make decisions based on that.
Yeah, it's the phones have been pretty quiet and nobody wants to make moves in markets. By the time you hear it, it'll be a little more clear. And hopefully that's what we're looking for, a little more clarity on where this may go. It really, does. It's still, even after they know, it's still probably not going to be real obvious what's going to happen in any of these markets. I do remember 2016 distinctly. The stock indexes had the most opportunity. I don't expect a lot of calls or texts tonight, but you never know. Probably some funny stuff will be texted to me one way or the other. And then back to business in the commodities. It'll be nice when there's some clarity and then we can make some decisions, because there's none, including the fund position in the market, which is usually a clue of where the market might be headed. And what are we, flat in corn right now? Slightly long since the first time in 2013, July, I think they said. So there's no clarity there either. We're in a very neutral position in all these markets. Stock market index is going to be interesting. Everybody seems to have a different opinion on where gold and silver may go after the post-election. Everybody seems to have a different opinion on everything. So it'll be nice when we finally get a little more consensus on anything, then we can kind of move forward.
That is my one hope.
Yes.
Is that we do have clarity in a day or two.
Yeah.
Tonight would be wonderful, but
and hopefully by the time this airs, it'll be for sure one way or the other. For a trader, that's what's important to try to get at least that some idea of where we are headed with the economic plan. Like the carbon pipelines and soy oil program, biodiesel, and all that. So it unfortunately ties into politics a whole bunch. I wish it didn't. It's actually really annoying for me, and it's really annoying to hear people's hot takes on it, which I am probably not the only one that's annoyed by everything. But it's really attached to the hip with commodities. So we got to see what's going to happen here. But as I mentioned before, the commitment of traders is a really good indication of what they think is going to happen in a market. And right now they're betting on they don't know. Like the corn is evened up, which is hard to believe given the size of the crop. So you can read that one of two ways, that these guys are buying it for a reason they don't want to be short anymore, and that's positive, or that they've now spent all the gas and now it's going to take something to get them long and put that money in here. What I find kind of astonishing is the corn barely moved through massive short covering. But I don't know that you can read too much into that either, because of the time of year. With all the hedging coming in at the same time they're covering, it just kind of negated itself more than anything else, and we stayed at this price. So maybe it's at equilibrium. That's something we don't talk about often. A market will get there, and it feels like crude oil's been there, very comfortable in between 72 and 67. Market gets into an equilibrium, and that's the point of the market, to try to find that price. Generally, there's things that influence it that doesn't stay there long. But corn it looks like that market to me, that it's at the price that it belongs. Selling very well. No reason to go lower. Hedge pressure's done. Seasonally, we had higher here after, I think, November 10th. And then the funds are flat, which if you don't follow spreads and national basis trends and spreads and the commitment of traders, I don't know how anybody could possibly even hedge. If you're not really familiar with those three things, you're missing gigantic pieces of the puzzle. Now, is it black and white every day? No, oftentimes the funds are net short 50,000 contracts or 60, or they're positive 60,000 contracts. That doesn't tell you a lot, but it does still tell you that it could go either direction fairly quickly when they do make a choice. Even recognizing that's going to help your marketing, and that's where we're at in corn right now. We're at a time of year where, absolutely can travel higher seasonally. The funds could buy it. There's plenty of room for them to buy it. But on the other hand, if something triggers them to go short, like the USD report on November 8th, the election and election results, and then the policies, or and tariffs and all that stuff, they could get wildly short. So in other words, it could go either direction. You're not saying, well, that's every day.
Great analysis.
It's not though. It's just recognizing what kind of market you're in is half the battle. You'll find guys that do basis contracts every year because that's what worked last year and the year before, and I'm just going to do that because that's been the right pattern for 2 years. That's crazy. That's a crazy way to market stuff. You need to dive into these numbers, or have somebody that does all the time, and at least check in every once in a while to see where all these numbers are. Right now, it's at a price that it likes. The world likes it, and they're buying it. And there's no reason to go down, but there's not a compelling reason to go up a lot either. And we're just at the stalemate.
I will say, we are still seeing consistent corn sales coming through. That has been impressive.
Yeah, it's abnormal, and back to politics. Is it because of the politics? Trump he just mentioned the 25% tariff on Mexico, unless they get the border thing settled out. I mean, he's not president, obviously, but it shows you the way he's leaning. So is Mexico buying preemptively? Because we don't know. It's an unusual pattern. That's all you can know. No reason to think that the demand's going to lighten up anytime soon at all. Because South America's second corn crop's not ready. They do have a lot left over, and actually year over year their sales are not great, so it's priced. Ours is priced more competitively, and that's what a market does. We get down to a price that everybody likes. They buy it. That's how you get out of that bear market. So the last 2 years, I found it kind of funny. Everybody's cheering for these higher prices. They want that short-term sugar rush. I'm not going to lose money. I'm not going to lose money. All it did is get demand away from us, and that's all it did, and ultimately would lead to a glut. So it's nice to see we're down to a price that's selling. It's very healthy. It's at a time of year where guys don't need to sell necessarily. It's much better than making the low in March than it is, than making your low when you're supposed to. So we're seeing a normal grain market this year. We went down, made our lows in August, September, like we normally did. Came up mid-September, came up quite sharply. And then, and then it kind of October was sideways. So we're seeing a normal market so far. We haven't seen this in years, and people aren't used to it at all. So we are going to be looking at hedging opportunities for sure for corn and soybeans. This is when you start getting your plans lined up. Yes, we'll be talking about old crop, but I'm talking about new crop. You need to break the cycle where you're always fighting this old crop right now. Like there's a whole gigantic group of people fighting what to do with this old crop. You should not be in this situation at all, especially coming down from a higher price. This is a situation you put yourself in. I know it's a hard thing to listen to, but last year was probably one of the easiest corn hedging that I've ever seen. The weather was very good. Started off a little rough for some states, but you've seen that look many times, and it doesn't amount to anything. And there was a price that was profitable for a very long time, and it was just simply passed on. And the story is that simple. The weather was good from day one, and people passed on a high price. Am I perfect? No, I'm not. But still, last year was one of the easiest years I've ever seen. So you need to break out of that cycle where you're always battling what to do with the new crop that's just coming in. You shouldn't be thinking about it that hard if you had profitable prices, because I'm not just saying short the contract at all. $5 puts were 34 cents last year, December puts. 34 cents. The price wasn't even at $5. That was an in-the-money put, and it was 34 cents. So you had 466, for your futures floor no matter what the weather did. or where the price went, and then you're upside wide open. It just does not get any easier than that. And you weren't open to margin calls. So I'll be the first to say that was as easy as it gets. Now, I feel like I messed up the hedge along the way, but I didn't mess up putting that on this year at all. Now, we should see a very similar opportunity this year. And you want to start breaking that cycle where you're always fighting what to do with all this crop going in the bin. Some years you'll have that. Some years it'll be low price the whole year. You'll never have that opportunity. They're more rare, and you will be fighting it. Even the best hedger will be fighting it. So you want to get out of that cycle. So back to 25. I'm already looking at 25. I absolutely plan on hedging on a rally. Now, if you want to know what I'm doing, definitely call me. I have no problem going over it in detail with you. I just simply can't do it. It's against regulations to put recommendations out there for people. So if you want to break out of that pattern, finally, we got to start looking at 25, and that's what we're doing. So the table's set. We hope that we rally out of here. Demand's good. We've got a lot of politics ahead. Even after the election, which is already going to have happened, you still have weeks of whatever is going to happen all the way into January when the new administration would start, or the slightly different one. We just don't know. So it'll be a very busy time for hedging in between now and I think January. You're going to find that opportunity. That's just my hunch. Could easily be different window. And then also the November 8th report. Super, super important report, because this is the one where they added a yield to October corn in the October report. They added November. Here's why it's important, even if it's 0.2 or 0.1. If they add it again, the trade's going to assume they're going to add it into the final yield, which is the January report. So that window from November 8th to January, whatever it is, 11th or 10th, whatever that window is for that final yield report, that's a brutal window when they think they can add yield. It really limits what it's capable of doing. On the other hand, if they cut the corn yield and we go backwards a bushel, then it becomes a lot more confusing historically. They might add bushels, they might take them away, and it might get more bullish. So you can see why this one's really important report coming up. If they add in October and add in November, there's a strong history they're going to add in January too. And that's why it's an important one to at least get a neutral, slightly friendly one for corn. Beans, whole different world. Again, back without talking about politics, had a lot to do with politics, the outlook. But even without that, beans have their work cut out for them. And then we'll be focusing soon on the South America weather, which is absolutely perfect right now. We're ahead of the 5-year average, I believe, for planting there. So it could not be going better in South America, but it doesn't matter. It's going to be that mid-December to end of January timeframe that's going to decide everything there.
I think it's important to know, you talk about in a rally, you're looking at, some sort of hedge option on corn, probably beans too. It's not you go hedge your whole 25 expected crop, right? I mean,
no.
You can hedge 5,000 bushels.
Yeah.
You can hedge 10, whatever.
Yeah,
you don't need to hedge the whole thing on the first rally we see either.
No, mainly what I talk about is the uninsured stuff, the stuff that's left wide open to risk. You know what I mean? That's what I'm talking about. The bushels you want to leave the upside open for, but guarantee a floor. You can do some of that through crop insurance, revenue insurance, stuff like that. A lot of different tools, and again, we talk about this quite often. It's getting educated to know which tools, when to use what to your advantage. Is where you're trying to get with hedging. It doesn't all happen here for sure, nor should it. It should be in about 3 different places if you're doing it right. Heavier in one place over the other, depending on the year. But people want this book that you can just hand out to them that shows them how to do it, or take a college course or two. The problem you have is the markets are in constant motion and things are constantly influencing and changing it. There is no book like that. It's only through experience and seeing that look in that market to even try to predict where it may be going. That's the only way, is to basically live through it. So you'll see some of these old-time guys that are very good hedgers. They've seen a million markets. They quit listening to newsletters and hot market signals a long time ago. Because just know, if that's what you're listening to, you're at the beginning of your trading journey and hedging journey. and they just go off what they know of the experience in the markets. And those are the guys that really that I see really excel at hedging. They're usually they walk to a beat of a different drummer and just kind of think their own way through things, not just on this side of stuff, but probably on the farming management side of the stuff too. Instead of buying new tractors, they're buying probably very smartly with their equipment. No doubt they just do things different than a lot of other people do. And I think that's what it takes to be a good hedger in the commodity markets. I think it takes that attitude.
Well, just a review, since you rolled through them really fast at the beginning, but you're saying you definitely need to learn how to watch the spreads. You definitely need to keep an eye on national basis and commitment of traders. Those are your three keys you're really watching.
You don't have to do any of that. I mean, if you don't, you're just randomly doing stuff to do it, probably off a hot market signal or something you read, and that's a terrible way to hedge. You want to use, they're not going to tell, the guys in the middle aren't going to tell you when they need your grains or they're going to be desperately short and they're going to be begging for it. They're never going to hear that. You can only read the tea leaves that we can see. And those are three huge advantages to recognizing the looks in the market, because that's the one thing they can't hide. Their positions, it's required by law that they report them. And then the other two things we're talking about, they can't hide that. The spreads, that's where their footprint, that's where they leave their footprints. And that's really the only clues as to where the market's headed, in my opinion, on the fundamental grain side of stuff.
Makes sense. I just wanted to make sure we reviewed that, because you went on a nice long explanation of all of them right after seeing it, and I do think that those are your keys really for any market.
Some people call them tangents, other people call them rants. I think it's a tangent.
Oh, okay. Well,
yeah. So So again, it's a lot of ground to cover. We could talk about all this stuff. There's an episode I want to do, and it's going to be entirely limit orders versus market orders, and it's probably going to offend a lot of people, or hurt their feelings, I should say. But there's just so much to talk about at all times. But still, those three things I talked about, if you're not following that stuff or having someone that really knows that stuff, you're really fighting a battle against guys that have much better information than you do. And you can't expect to win in any business when that's the case. So what you try to do is fight fire with fire a little bit and educate yourself. And I'm not talking about getting away from farming and doing this 10 hours a day. It takes 1 minute. A 1 minute phone call is all you should need once a week. And so the effort level can be exceedingly low, and you can still do very, very, very well at gathering that information very quickly. So it's not going to take a lot of time out of your day. You just need to know where to go find it. That's where I think everybody struggles, or a good portion is like they just hear so many different things and so many different people's opinion that they get confused and they just kind of don't know what to do. And there's a lot of bad information too. Hot market signals, that's, everybody wants it just boxed up with a bow for them with a market signal. It's been everybody's dream just to go on a beach and have their computer kick in trades on their hot signals. I mean, everybody since I've started, that's been the dream. I've had guys with TradeStation that have developed their own systems, and that's their dream. Like, it's everybody's dream for that. It's just not very realistic. You can go online right now, collective2.com, I think it's called. They have many systems for sale. Like, it's super common. One guy will be charging $29 a month. The other guy will be charging $1,100 a month because, and they have all the stats for them. All these systems make money, according to them. They're all, for sale. Super common. And guys just want it packaged up like that. Unfortunately, it's just a gritty deal. Like, it's a gritty you're always working or at least looking for better information. Or, again, a lot of you like to farm and concentrate on that and bigger yields, and that's really important. No doubt about that. And you might not have a passion for it. Find a guy that knows what he's doing. Check in with him once in a while. Keep looking for that guy. That's my advice to you if you don't want to spend the time doing it.
Well, I'm looking at the book on your bookshelf right now, The Predictors, and I don't know what year that was. I'm going to say mid-90s maybe. I mean, they've been trying to write these perfect algorithms for a long time to make
very long time, and everybody thinks AI is going to change trading. That's where AI came from. Everybody wants to unlock that. I don't have to do any work, and it's going to kick out market signals to me. At the very beginning, the turtle traders were able to do that with the trend following, that famous experiment where they had the trend following deal. They said, hey, anybody can do this. I can take 5 guys off the street and do it. And they did. And they just had the turtle method, they called it. And those people were able to turn whatever 10,000 into a million or whatever they did and show that it was a tradable deal. Markets get more efficient. That did work. The predictors in that book, that did work. And then it evolves. Because it works, then of course it evolves. So AI will never catch up with this. It'll get faster and faster and faster. But because it's discovered something or a pattern, it'll evolve that pattern into a new pattern because enough of it discovered it. So it's always changing. And when I first started, it was just hog spreads, hog spreads, hog spreads. They were consistent. You could set your watch by them. Sell the winter months, buy the summer months. Like I'd be selling February, buying June right now. But then it got to working so good. Eventually, they never got very narrow, and February and June often are very wide apart, and you get more risk than reward. Before, you could just count on them getting real narrow and then widening out. But it evolved because it worked so well for so many years, as all markets do. You see the same thing in stocks. You might have a hot way to trade calls and Tesla, and it works great for 3 weeks, and then all of a sudden it doesn't work. That's why all these systems work great in spurts, and then they kind of quit working because you'll get into that drawdown. But if you are a system guy, you're looking for a system, always look at that max drawdown. That's the big one. That's the one that all the Wall Street investors look at. If you can have a consistent system, prove it, with a small max drawdown, you're going to be attracting a lot of money. It's that max drawdown that's the most important category. That's when I look at the seasonal spreads and any of the seasonal trades. Like, I like the consistency of a lot of the seasonal stuff, but if you have like a unleaded versus heating oil and the max drawdown's oftentimes $4,500 before you get to that $4,500 gain, that's a lot more than people are usually willing to risk. So max drawdown psychologically is the most important thing that you should be looking at when you're looking at systems or you're trying to develop a system. But anyway, back to that's what everybody's always wanted to do. And again, it's always that carrot right in front of you. Just right there, if I tweak it a little bit more, the system's going to be working. And like I said, I'll go on a cruise and just have my computer trade for me. Everybody's been trying to do that forever. Don't fall for that trap. And if you do it and you're successful, you probably worked very hard at it for a very long time, and you deserve the win because that's how it works in pretty much any other business. And there was no shortcut to get you there at all. And you probably worked harder than a guy. You probably worked harder for your money than a lot of people did. So there's no shortcut back to hedging. There's no shortcut there. Experience, or find someone that's had a lot of experience with it. That's your best chance at having a shortcut.
Well, and my one point, just going back to the algorithm side of things, there's a certain market that I watch, and I don't want to say what it is because not because I don't want to share it, but because I don't want to give advice or make a recommendation. But it will go weeks where it will be up in the morning every morning.
Yep.
Before the market opens, it was up in the overnight trade, and you can pretty much sell it every single morning and make a few cents if you're willing to sit there for 10 minutes and watch it.
Yep.
It's just the way it's gone. But as soon as I notice that and make a move on it, things have changed, right? I mean, that can happen for 3 weeks in a row. You try and take advantage of it. All of a sudden, it doesn't do it.
Yep.
Right. And generally, those are probably computer trades that are going in, whether it's overseas or whatever. They go up. They're buying commitment of trader things that they're making these moves, and they have those timed, and eventually they stop making those moves.
Yep.
If you're watching them, there's opportunity out there, but these are speculation side things. That's not.
Yeah, and you got to do your own work, and you got to find them. No one's going to hand them to you. The market signal thing, pay for market signal. If it was working, why in the world would they be selling it? I mean, just you would want to do exactly what you would protect it with. You would tell nobody. There's spreads that I like to do that I tell about to my clients, but I don't want everybody to know about it because they're not all super liquid. So the people that are making money usually aren't talking a lot. And the ones that are, they put their track record up there as like a CTA or a hedge fund and said, hey, by law, I have to show you what I've earned. And then if they can show this consistency, and they're definitely out there, there's a lot of them, go look at the minimum investments these guys have. And a lot of them are closed funds that you can't get into. So it's not an easy club to get into. And don't think that you can just wander into it with a hot market signal. Again, that's where everybody starts, and you need to learn all these lessons. I'm not saying all signals are wrong. There's plenty that are good, but just don't expect to solve it in a day or two or with one subscription to something. It takes more work than that in the markets. You don't have to spend day and night at it. What time is it? It's getting towards 2. I'm going to walk out of here and probably not think about the markets. It's not as hard as, it doesn't have to be, it takes hours and hours and hours every day, or I need to find a subscription. It could be something in between. I used to have a guy that subscribed to one of the guys that, I won't say any names. I don't want, everybody has their own business, but he used to subscribe to this certain fella that does tend to cover a lot of ground, and he, a lot of people have subscribed to him in the past, just to make sure that he was never on the same side as that guy. This client is no longer with us, but he wanted to make sure he felt he was so poor for so many years that he wanted to make sure that he didn't think the same way. Now that's a pretty extreme example, but it's a true story. I mean, that's why he subscribed to him.
Well, Unusual Whales, that website has the reverse Kramer index. So
yeah, that's pretty funny stuff.
I'll list names on that one just because they have it listed, but it happens too, though. I mean, you take like a Kramer who's on the TV making recommendations. That's going to influence a market to a certain extent.
Yeah, and the laws get murky with that kind of stuff. Now, if you're not registered with anything, I don't know that I think that you can make recommendations, or at least say what you want to say, mainly on, like, you see it on Facebook, you see it in a lot of different groups, a lot of newsletters seem to say whatever they want to say. But if you're in the industry and you have oversight, there's very little that you can actually say that isn't your client, and even your clients, you have to have disclaimers and everything. So it's a highly regulated on this side of stuff. But you make recommendations, absolutely. You just can't do it publicly. So any of that stuff that you see publicly, that's your first warning sign. And nowadays it's even noisier because a lot of people realize you need the algorithm, you need more content. I'll just put out a quick blurb on the soybean export market, and then boom, you're on record for saying something that day. So you're getting more information than ever, and I don't think it's helping people at all. I think it's confusing people more than ever. I think it was better when people used to call their broker and he would filter out all the garbage and then just kind of give you the lowdown. I kind of miss those days. We're definitely moving away from them, and it doesn't seem like more information is better. And I don't feel like it ever has been in commodities. I'm very much a believer in the market is very efficient that way with the news. Like if you heard it, guys with a lot more money and connections have heard it way before you've heard it. Although there's been a few times where you could make money with the information you saw. And the big one is, of course, drought, because it lasts a long time and it doesn't happen in one day. That's where almost everybody makes money. It's like you can say it's hot and dry out, it's going to go up, take some time, call your broker, buy it, chase it up 20 cents, and the next day it's up another 20. That's where everybody makes money when they follow the news, is droughts. That's the one exception that there is out there that I can remember, or the Russian-Ukrainian deal. Yeah. Something like that's a longer time frame, Middle East and the oil. We recently made some money in oil. Some of the guys called on the latest threat from Iran, and they bought on that threat, and it made money. Like, that doesn't happen very often, but it does sometimes.
That's the opposite of what oil's been doing, though.
Yeah, it actually has been.
It was when and that's the trick to trading the market, right? But, for the past 6 months, any threat of war in the Middle East, then oil was going down.
Yeah,
and then it'd start creeping up, and then there'd be a new threat, and oil would go down.
Yeah, it definitely is almost like they have the script before it happens. No, usually in the tension you see it go up quite a bit. This one was a little easier because it was going down quite sharply, $3 or $4 the day before that threat came out, And it was one of those rare things where even I did. I think I had a micro. My client wanted a micro. I bought him a mini, which is a half-size contract. And then I bought myself the micro. So I made that mistake, and it made money. He was pleasantly surprised that he was up as much money. Unfortunately, on the broker side of things, if you make a mistake and it makes money, it belongs to the client. If you make a mistake and it loses them money, you pay for it. So I was more than happy to give it to him. So I had a micro. He had a mini. He was happy. And I wasn't convinced that, I just thought, hey, here's a headline. They've really beat up this market, and why not? So it doesn't happen like that very often, though. It's very rare, but it does every once in a while. But my point is, everybody tries to do that every day. Here's what I read. Let's do it. 9 out of 10 times that doesn't work.
Yeah. I feel like this stretch has been a little bit of a downer, so let's give the positive side of markets.
I got a great one I saw on Twitter. If I don't say it, I'll forget. The one guy, he tweeted out, he's like, doesn't it depress you to think you'd be a millionaire if you just took the other side of every one of your trades? Of your own trades.
I know that's true for my account.
That was just great. I mean, it doesn't exactly work like that, but that sums it up. I mean, so that will be the low note. If you took the other side of every one of your trades, just think how much money you would have made actually.
Yeah. It reminds me of one of the funniest things I've seen from a comedian. He was doing a rant of, bet on me? You're not going to bet on me? I'm not betting on me either, dude. The number of times I've failed, there's no way I'm betting on me.
yeah, exactly. Yeah, it's always good to have a sense of humor about yourself. That's always funny.
Right. Well, anything else to add today, John?
No, I mean, we try not to talk about. We had to talk about it, unfortunately, a little bit, and that's what the rest of the day is going to be for me. By the time you hear this, it'll hopefully be over, and then we can come up with a marketing plan. We'll talk about maybe next time how a guy puts together a marketing plan exactly. Like I'm talking, not what to do, like the whole process of it. I think there's a lot of people that don't even know how to do it. And, whatever happens with the voting, sun will come up again the next day.
Excellent. Well, thanks, John.
Yeah.
Oh, you should probably leave your number. We usually do that at the end.
218-731-1578.
Now I can say thanks, John.
Yeah.
I forgot to hit record.
Yeah. That's fine. When I do think of ideas, I in detail need to write because I've had a few doozies.
Best one ever.
I do remember that part that it's like, oh, this is going to be awesome. Don't let me forget. That's why I did that, and it's like my notes are terrible.